Stop scrolling, because you are unknowingly leaking at least $187 every single month. And the scariest part is, you signed the papers yourself. Let's be real for a second. If you have car insurance, health insurance, home insurance, or life insurance, you are playing a rigged game. And in 2026, that game has gotten way more aggressive. The rules changed, the technology changed, and if you're still using 2024 logic, you're getting scammed in broad daylight. Insurance companies don't need to rob banks anymore. They've turned premiums into a silent killer, a slow monthly wealth drain that most people never question. Today, I'm exposing 7 secrets insurance adjusters don't want you to know. These aren't theories. These are industry tactics, stuff insiders learn in training rooms, not in commercials. And listen carefully, because in the middle of this video, I'm revealing a loophole so powerful it can cut your premium by up to 60% without changing coverage. Not switching companies, not canceling policies, just using the system against itself. But before I show you that triple stack method, you need to understand why your current policy is a ticking financial time bomb. Here's the dirty secret they'll never say out loud. Insurance adjusters are not paid to help you. They're paid to protect the house. Behind the scenes, insurance works more like a casino than a safety net. The company always wins, unless you know the glitches. Adjusters are scored, ranked, promoted, and bonused based on how little they pay out. Internally, they call your claim a leak. Your payout is literally viewed as a problem to be minimized. And here's where it gets ugly. In 2026, adjusters aren't even making most decisions anymore. AI is. Every claim now goes through an algorithm that assigns you a compliance score. It analyzes how fast you respond, the words you use, how emotional you sound, your past claims, your credit behavior, even your zip code. This is not insurance, this is financial profiling. If the system flags you as low resistance, you get lowballed. If it thinks you won't fight back, congratulations, you've just qualified for the worst offer. And most people accept it. That's the trap. The #1 mistake people make is thinking the first offer is fair. It's not. It never is. The first offer is an anchor, a psychological weapon designed to reset your expectations. They throw out a number, watch your reaction, and adjust from there. If you hesitate, they wait. If you push back, suddenly there's room to review. Here's the kicker. Every claim has a payout range already approved internally before they ever talk to you. Meaning the money exists, they're just testing whether you're educated enough to demand it. And now it gets crazier. Because in 2026, insurance pricing itself has become AI-driven. Premiums are no longer calculated once a year. They're dynamically adjusted using third-party data you've never seen and never approved. Mileage estimates, employment risk scores, online purchasing behavior, neighborhood crime predictions, health probability modeling. If that sounds dystopian, that's because it is. One wrong data point, just one, can inflate your premium by hundreds per month. And here's the glitch. Most of that data is outdated, inaccurate, or straight up wrong. But the system assumes it's correct unless you challenge it. And almost no one does. Now let me slow this down because this is where most people accidentally commit financial suicide. Buried inside your policy is language that sounds harmless but is absolutely lethal to your claim. Phrases like reasonable wear, pre-existing conditions, or the new favorite, AI-adjusted deductibles. This allows the algorithm to retroactively raise your deductible after a claim is filed based on risk reassessment. Translation, you pay more after something bad already happened. And adjusters are trained to get you to admit things verbally that trigger these clauses. Words like old, already, probably, or I think. One sentence can cost you thousands. Now wait, because this next part is where the entire game flips.
Here is the golden nugget, the loophole they hope you never learn. In 2026, new consumer transparency regulations quietly went into effect. Almost no one talked about them. Media ignored them. Agents definitely didn't explain them. But under these rules, you have the legal right to request a full AI underwriting data audit. Not a quote, not a discount request, an audit. This forces the insurance company to reveal and reevaluate the data inputs used to price your policy. And here's why this matters. When people request this audit, insurers routinely discover errors: wrong mileage, incorrect job risk classification, old addresses, inflated behavioral risk scores. When those errors are corrected, premiums collapse. I've seen people drop 30%, 40%, in some cases close to 60%. Same coverage, same company, same protection. That's the triple stack method. Audit the data, remove the errors, lock in the correction. And no, agents don't tell you this because digital-first insurance platforms are already killing traditional brokers. This loophole accelerates that shift. Now let's talk about delay, because delay is another weapon. If you've ever filed a claim and felt like everything moved painfully slow, that wasn't accidental. Insurance companies track something called claim fatigue. They know that the longer a claim drags on, the more likely you are to accept less just to be done. Emails go unanswered, documents get lost, adjusters change, timelines reset. This is not inefficiency, it's strategy. But here's the counter. The moment you switch everything to written communication and reference regulatory timelines, the behavior changes fast. Because written records create liability, and liability costs them money. Now here's something most people don't realize. When an insurance company recommends a repair shop, a medical provider, or a contractor, that recommendation is not neutral. Those providers are part of a closed ecosystem. Think of it like the mafia. Everyone gets paid as long as costs stay low. Cheaper parts, faster repairs, minimal labor, maximum profit. You are legally allowed to choose your own provider, and when you do, the quality difference is massive. Better repairs protect resale value. Better care prevents repeat claims. That alone can save you tens of thousands long term. But wait, it gets darker. Insurance companies maintain internal profiles on customers, not just claim history, strategy notes. Notes about how hard you negotiate, how fast you cave, whether you escalate, whether you know policy language. These notes influence future claims. And in many jurisdictions, you have the right to request partial disclosure of this file. Most people never do, and insurers love that, because informed customers cost money. Now you might be thinking, this sounds extreme. Honestly, what's extreme is how normalized overcharging has become. Insurance has turned into a subscription-based wealth extraction system, a quiet tax on fear. But here's the truth. Once you understand the rules, the power shifts immediately. You stop accepting first offers. You stop trusting vague explanations. You stop paying for errors that aren't yours. And suddenly, the system treats you very differently. That's why this matters for your family, for your future, for your financial protection. Because the 1% already know this. They use private adjusters, policy audits, data reviews. They don't play blind. Everyone else gets the retail version. So here's your move. Pull your policy, question the data, demand transparency, and never assume the company is acting in your best interest. Because the insurance giants want this video taken down. They want you confused, compliant, and quiet. Hit subscribe to stay ahead before the algorithm buries this. Share this with one person you actually care about. And if you think this was bad, wait until you see my next video on why most life insurance policies in 2026 are a wealth trap and what actually protects you instead. Stay protected, stay informed, and don't let a rigged system drain your future.